Are you down with the PPT? Yeah, you know me. Are you down with PPT? Yeah, you know me. So I'll stop joking and playing off the old Naughty by Nature OPP song, even though it's one of classic hip-hop songs. Great song. Anyways, though, just want to give you guys a live stream this week. Instead of doing it tomorrow because the Dodgers playoff game is on tomorrow and they're playing to get into the World Series, I'll do it today on Thursday. So before we do any more analysis in this live stream and answer listener questions towards the end, I have to do this stupid disclaimer. So anything I say here, any companies, any analysis, any current events we talk about, any of those insights are for informational and educational purposes only. Do your own due diligence. I'm not a financial advisor. I do not want to be a financial advisor on the phone making sales calls and trying to sell garbage mutual funds or bond funds or annuities to grandmothers or widows or orphans. And that's unfortunately how a lot of the industry is. So, as you guys know, I was that a long time ago when I started in the industry and I didn't know anything about business or investing or finance. I got stuck with one of those jobs and it was horrible. So, now that we've gotten the stupid disclaimer out of the way, I want to thank my Patreon contributors for continuing to donate, and we've had a few more come in. And hopefully tomorrow I will get back in the swing of things with an expert interview. So hopefully there won't be any technology problems. Hopefully I won't have to wait. Hopefully I will not have to waste hours with tech support on any of the either Windows or Zencastr or any of those guys anymore. It's just been a pain in the ass last couple months. Okay, so last week, the Dow was down over 1,300 points for whatever reasons. You know, there's a great book out in the past by Nicholas Nassim Taleb. I think it was his first bestseller called Fooled by Randomness. And the mainstream media, if you want an interesting, thought-provoking book, read that book. I think it's like $2. Once in a while, they have it for $2 on sale on Audible, the full book. And so okay, I just remembered I had a little tiny brain fart there. And so the mainstream financial media always tries to attribute moves up in stocks, moves down in stocks, you know, those type of moves. They always try to overreact to things and they always try to blame something on one or two things. And normally it's never like that. Okay, Nicholas Nassim Taleb explains it better than me in his book, Fooled by Randomness. But you know what? The mainstream media is doing it again this week with why stocks are not going up again. You know, the jobs report is supposedly good. Jobs report is supposedly good. Supposedly there were all these financial jobs that were created. Yet, and you guys know I have a ton of contacts in the financial industry, people with decades of experience, hedge fund managers, you know, people who used to work at investment banks, all those guys. A lot of people in the financial industry are not doing well. So all these financial industry jobs that are being created, maybe they're part-time, maybe they're entry-level, maybe they're hiring a 22, 25-year-old college kid or something, someone who just got an MBA, someone who just graduated college and is willing to take $30,000 or $35,000 a year. Okay, the financial industry is not really creating jobs. Go and look up the articles of the investment banks that are firing people left and right. The industry is automating with these high-frequency trading algorithms, trend trading programs, and then also passive index fund investing. People, human beings in the financial industry are getting fired left and right, especially for money management. Okay, because passive investing for a while has worked. Anyways, I went off on a little rant there. So I just wanted to say that all the reasons that the mainstream financial media is talking about why stocks are not going back up again are probably total BS. Okay? But there is something important here that I wanted to stress. And Zero Hedge covered the story, it's being covered elsewhere, is that institutional investors are starting to sell this rally. They're starting to fade it, which is the cover, the economic cartoon I have there for you guys. So there are not all institutions, but tens of billions of dollars in institutional money in the last month has started to fade these stock rallies now. And it's for a bunch of reasons. And it's normally not the reasons that the mainstream financial media or Jim Cramer or any of the talking heads on TV are giving. And the funny thing is some of these guys that are going on TV, these institutional money managers, are talking up stocks bullishly, but when you see their releases of their earnings, of their investment holdings, they're dumping. They're selling the rallies now. Okay? This is the hypocrisy of the mainstream financial media, the hypocrisy and basically unethical behavior of the financial industry in general. Now, there are some good people in the financial industry, but there's a hell of a lot of unethical people in the financial industry. Unfortunately, I've met a lot of them over the 10 years I've been in the financial industry now, give or take. So you have to be careful out there. You have to do your own due diligence. If you watch CNBC or Bloomberg and you think that you learned something in 5 minutes or 10 minutes and you think it's going to make you a lot of money trading on it, probably not going to be the case. And I'll talk about that later in the show because I'm going to use Netflix as a case study. Okay, so let me just check my notes and get a swig of water real quick, and we'll be moving on to other topics on the show. Okay, so the other, I had another point or two before about why institutions are selling the rally. So there's a number of factors. There's a Zero Hedge article interviewing like Larry Fink from BlackRock, who has enormous many trillions of dollars in assets under management. And what institutional clients are saying is that there's a combination of, they think earnings have peaked given a strong dollar, the combination of trade wars potentially accelerating. Let's see. There's a number of other factors that I'm trying. Oh, the volatility. Oh, so the volatility in general. The fact that there's volatility back in stocks, the institutions it's making them queasy. The institutional money managers, they don't want to have too much exposure to a certain stock or the stock market in general, and wake up the next morning or go on vacation over the weekend, come back, and then all of a sudden the stock market's down. So they'd rather start selling that. So you're starting to see, because of the combination of factors of strong dollar, institutional investors think earnings are starting to peak. Although with share buybacks, as long as they continue, there's going to be financial engineering, but you're seeing the consequences of that with General Electric. Operationally, General Electric is a mess right now, and a lot of it is because they financialized, because they went to financial engineering instead of innovating and investing in research and development and trying to create new businesses in that way. And GE may have a dividend cut. I don't think GE is going to go out of business anytime soon in the near future, but they have an enormous amount of problems. Charles Ortel, who has been predicting the demise of GE for a while, and also he predicted General Motors bankruptcy. He predicted the Wall Street banks were in trouble years before the 2008 financial crisis. He thinks that GE is in big, big trouble, more than just a dividend cut. So we'll have to see about that. But my point is that there's a number of different important factors that the mainstream financial media is not actually giving the reason for why stocks are not going up again. And so these jobs reports, like whether it's the United States or China, all these government statistics are pretty much totally bogus. Okay, so these trend trading computers may temporarily move stocks higher on the headline number for these economic data, whether it's GDP or jobs numbers or unemployment claims or inflation data, that type of stuff. But there is headwinds now for the stock market, and a lot of it has to do also with the Fed. Because the Fed was giving this asset price inflation, and not just with the Fed, all the other major central banks, the major 5 or 6 central banks have been either taking turns or coordinating quantitative easing and liquidity programs for easy money and credit. And the Fed now seems intent, Jerome J. Powell seems intent on continuing to raise interest rates. And, I don't know if it's going to happen this year, where he raises interest rates and something breaks, but if he keeps raising interest rates, something will eventually break. And it probably won't be the U.S. economy first. It will probably be, educated guess, not financial advice. It will probably be corporate bonds, which I've heard now are like, those things are being chopped up like mortgage-backed securities were. Mortgage-backed securities were chopped up and collateralized into collateralized debt obligations, mortgage-backed securities, those types of things. Now corporate bonds, like of different ratings, are being chopped up into collateralized loan obligations. And that's been going on for years too. Wall Street basically, after the housing bubble, they knew that they couldn't go to housing right away because the public backlash and the Congress and the regulators were looking. So they started chopping this stuff up to make more money, selling like really nasty derivatives products for income to make extra revenue. But they were pitching it to the pension funds either in the US or in Europe as income generators for like collateralized loan obligations for like subprime auto loan debt, student loan debt, and also now corporate bonds. So there's a bunch of junk out there as well. This is what Wall Street's good at. Wall Street is very unethical, and the investment banks don't care because I guess they expect another bailout after the next crisis. So they're going to try to maximize every single dollar of profit. Now, not every employee on Wall Street's bad, but there's a good amount of them that are willing to sell this garbage knowing it will blow up as long as they can get more bonuses, and then their company can hit those earnings per share targets. If they're upper management or even middle management, they can get those stock option bonuses too. This is the perverse incentive problem with publicly traded companies, with the banks in general, and with society we have right now. Okay, so let me check my notes again. Oh yeah, so with the Fed keeping, raising interest rates, the most likely candidate for something breaking, there's three in my opinion, and so that is European banks and the European Union, which I've talked about that at length. But, they've given out a lot of bad dollar-denominated debt. European banks have to emerging markets. So you have emerging markets, European banks, which are tied to emerging markets, which have given out too much dollar-denominated debt loans to emerging market governments, emerging market banks, emerging market corporations. And then the last one is corporate bonds. So if the Fed is serious about continuing to hike rates. They've said that they will hike rates once more this year in December, and then approximately 3 times, maybe more, next year. If they continue on this path, eventually, something in that area, I call them economic landmines, and the global economy is still one giant fustercluck. Something will eventually break. But have you guys noticed that President Trump now, he's already deflecting. He's already pointing the blame at the Fed. So the mainstream media obviously is they have tape of him, and his tweets taking credit for the stock market rally. But President Trump has already moved on. He's blaming the Fed now for any bad things that happens in the near future. Something interesting also that happened on October 11th, or at least Reuters reported it on October 11th, the head of the IMF, Christine Lagarde, she gave a speech and she was telling emerging markets to implement capital controls. It's really amazing, man. It's really amazing. If you like liberty and freedom and free markets, I mean, the exact opposite has happened. It's like everything's going back to post-1929, like totalitarian government interventionist economics. We are headed along a really scary path. There was a hedge fund manager, chief investment officer, Eric Peters, I think, and he wrote a really in-depth article about the financial history perspective, comparing things to from right now, all the stupid policy mistakes from central banks and governments and treasury departments with, escalating tariffs and trade wars, to what led to World War II. And the U.S. is also, looks like, starting a new Cold War with China. So things are escalating in that regard as well. Okay, taking a quick swig of water, and then I'm moving on to the next topic. I guess this was predictable, though, that President Trump was going to eventually blame someone else, right, for when the stock market stopped going up. Maybe the stock market will start going up again, but it seems that institutions are worried about a number of the factors. I said when we're doing this live stream, the dollar index is just under 96. Dollar index is at 95.99, literally. The VIX is back up to 20. So these are warning signals. And this, as an institutional investor, if you're managing other people's money, you're going to see these things. You're going to look at the 10-year U.S. Treasury yield, which is, I think, at 3.17. Last time I looked at it a couple minutes ago, it's at 3.17. Let me look. Yes, it's still at 3.17. I guess that market's closed right now. But gold and silver have started to rally. I do have a stock pick for you guys later in the show. I will talk about it. I will highlight it. Again, not financial advice. Stupid disclaimer. But you can do your own research on it. So we have a finance professor at the University of Texas, and he has a bunch of data proving that the VIX is manipulated, but Wall Street and the Chicago Mercantile Exchange and those guys hate him. And then did you guys also see that only 2 traders were found guilty of rigging LIBOR? Really? That's like the financial equivalent of Lee Harvey Oswald shooting JFK, right? That's only 2 guys. Only 2 low-level, if you've worked in the financial industry, if you've worked on Wall Street, if you've worked in a trading department, for 2 low or mid-level traders to double-handedly rig LIBOR, which is like a multi-trillion-dollar market, all by themselves. These guys have to report their positions to their managers, and the managers have to report the positions to the middle management and upper management, okay? So for only two guys, these guys are fall guys. These guys are scapegoats. That's why I use the Lee Harvey Oswald, pick your scapegoat or, you know, Patsy analogy here, okay? If you really believe Lee Harvey Oswald was a lone gunman, oh my God. I mean, Trump declassified the JFK files, okay? And there's plenty of other evidence out there that it wasn't just Lee Harvey Oswald. I don't even think Lee Harvey Oswald was where he was when they said he was, okay? There's I don't want to go into this, it's off topic, but there's a lot of research out there proving that he was not there where they said he was, okay? And he was totally set up. It's just ridiculous what the banks get away with. I mean, they made tens of billions of dollars rigging LIBOR. They pay some fines. And, you know, no one at the top, none of the real immoral, unethical banksters go to prison. Only two low-level guys. Maybe they got, like, some type of payoff for their family or something. Welcome to dystopia, right? Welcome to dystopia. Okay, so we're going to do a case study now for Netflix stock. So Netflix, first of all, full disclosure, I really like Netflix. They have a lot of good programming. I'm sure many of you listeners also like the programming in Netflix, okay? The programming, the content itself isn't really the problem at Netflix. The problem is the operational business and what they are doing to pay for the content and how they are management team is choosing to grow their business. Okay, so Netflix right now is at $346.71 a share. Netflix just reported earnings, and the stock went higher, but in the earnings, buried in the earnings, for people who, like me, who are more fundamental people who actually look at the operational business, Netflix actually reported for the quarter negative $1.7 billion in negative free cash flow. So that means that their expenses were more than the cash flow coming in. And so temporarily, when your share price is going up, when you're a big company and everyone says, oh, your stock price is high, your credit is good, you know, you can get away with stuff like that. Amazon, to a certain extent, is very similar in that regard. But Netflix, from an operational standpoint, has some big problems. And it's really interesting. There's a really good article even from Yahoo Finance, and I was surprised Yahoo was even saying anything bad about Netflix, considering how, you know, perma-bullish Yahoo normally is on technology stocks. But Yahoo even had a pretty halfway decent balanced article on Netflix interviewing some of the bearish analysts. And, you know, even the bullish analysts on Netflix, they're even a little worried now. And I'll just tell you some of the discrepancies. So the bullish case for Netflix is that they have leading market share, they have great content, they are still growing their user base, but the bullish analysts on Netflix covering the stock are the range of when Netflix will actually be consistently profitable, will actually be consistently generating free cash flow, is literally all over the map. I only spent about 15 or 20 minutes looking at different Netflix research articles, and some of the different analyst comments were totally different. I mean, it was way over the map. I'll give you an example of this. So there was one analyst who did not lower his Netflix stock price target, and he was saying that Netflix is going to have free cash flow in about 2 years. So that was his guess. There was another analyst who did not want to lower his stock price target on Netflix, and his estimate for when Netflix was going to be cash flow positive, generating free cash flow, be able to fund all of their growth expenses, their maintenance capital expenditures with, you know, free cash flow, he was estimating in 4 years, 2022. And then the bearish case, and I would tend to actually maybe agree with this because this is how Netflix has decided to build their business model, and I think management is going to have to tweak their business model because they're using tons and tons of debt to buy content, and they don't even own the content. That's a problem too. So they're leasing the content and they're paying higher and higher prices for quality content to lock it up, but they don't own it. So I'm not sure if this is the best analogy, but this is the best one I can think of. It's like that doctor or lawyer that you know who is always living beyond his means, who doesn't buy a car, he's single, he has to go out every couple years, and he has to go and he doesn't own, he has to go and lease a new car, like a new Porsche or Ferrari or BMW or Mercedes, to go and get younger and younger women. So it's kind of like the guy with the midlife crisis maybe was divorced or something. It's kind of like that. And for now, Netflix is getting away with it because people love the product and, you know, they do have some revenue and they can still borrow debt relatively cheaply. But Netflix has over $8 billion in debt. Okay, over $8 billion in debt. They're burning, I think, $10 million per day right now. So management is going to have to tweak the business model at some point, especially with interest rates rising. And this, in my opinion, this is not financial advice. In the past, a number of years ago, I want to say about 4 or 5 years ago, because I used to do Insta blogs on Seeking Alpha, and I used to do comments on that stuff, and I used to pay more attention to earnings with a lot more other types of individual stocks. But Netflix was just having massive swings about 4 or 5 years ago. In fact, some of the swings were like $20 a day, $30 a day, even $40 a day at one point. And so, like, if you timed things right and you knew how to look at charts and you could kind of guess with earnings, you could make a lot of money in a very short amount of time trading volatility in Netflix. So I think Netflix is going to have a lot of volatility in that stock going both up and down because of the way that management has chosen to grow the business. And management team seems not interested right now in selling shares, selling equity. And they're not in that much of a hurry to, you know, slash expenses, let's see the right word, have more controlled growth, be more careful with how they grow. So they just seem to, because they can get away with it now, because the stock price is high, because interest rates were cheap, at least in the past, they could borrow. And so that was giving them leverage. But you know what they say about people with leverage, that you're giving yourself more and more rope to hang yourself. Like at first, when you open up a credit card, you're buying a couple purchases, it's not that bad a deal. But if you're not making the payments, not paying the debt back, it starts to add up and it starts to compound and it starts to get bad. And Netflix is not in trouble yet, but it's heading that way. So I think management's going to have to make some changes to the business model, at least some tweaks. And that potentially, to me, means that Netflix could have some very volatile swings, both up and down in the stock. I would not be surprised to see $40 or $50 swings on a daily basis in the near future if things don't get corrected at Netflix. And on top of that, Netflix has more competition coming. So you have Disney opening up their own streaming company. That's going to be moving Marvel content and other content away. So there is, because of the success with market cap of Netflix and how respected they are, you have other entrants now into the streaming model. Amazon's in there too. And Jeff Bezos is subsidizing that. I will check out the listener Q&A later, so I want to make sure I get most of my points across. Check my notes again and a swig of water. But yeah, there's a lot of analyst discrepancies among Netflix about when they're going to be cash flow positive, when they're going to generate free cash flow. Important things like that. The estimates are all over the map. And I would tend to be on the bear case, but I don't think that means the stock price is going to collapse. Why? Because people love the product, number one. And number two, you have all these people with a pro-tech bias. Anytime the stock drops a certain amount, the stock's going to have a rally because someone like a hedge fund manager who's pro-tech or a mutual fund manager who's pro-tech is going to come in and buy the stock. So that's why I think there's going to be a lot of volatility, both up and down. Because I could see Netflix maybe announcing subscriber growth and, you know, maybe having, obviously I think they're going to have a lot more winners on the content, but the other parts of the operational business, they have a debt problem. And it looks like it's going to get worse because that's how management has decided to fund the company. And so that's going to cause volatility because you're having fights with bulls and bears because it's not obvious what's going to happen to the stock. Although I think with Tesla, I think things are more obvious than that, than Netflix. But Tesla's committing fraud. There was actually, I listened to, if you guys want to check out something very interesting, McIlvaney Weekly Commentary podcast, which was released yesterday. He was at Jim Grant's conference, and there was a presentation from this lady named Francine McKenna, who's a investigative journalist, a financial reporter, and she's also a forensic accountant. I think she's a professor now, too, for forensic accounting here in D.C., and she said at the Grants conference, and David McIlvaney was talking about this on his podcast yesterday, that Warren Buffett, Berkshire Hathaway is committing accounting fraud. I mean, and Alibaba's committing accounting fraud, like egregious amounts of it. It freaking sucks. It's a new normal. But I guess as long as people can get away with it and no one's going to go to prison, that people are going to do it. Fraud has to be enforced. Okay, so moving on to the next topic here. You know, surprisingly, the stuff with Saudi Arabia, it hasn't moved the oil price a lot higher. I mean, they threatened to, with this Jamal Khashoggi stuff, they threatened to, you know, stop lower oil production, lower oil exports, and move the oil price higher. President Trump has been obviously tweeting a lot about the oil price and gasoline because he knows that his voter base cannot really afford much higher oil prices, so that will hurt them more. It's just interesting. We're at an oil price right now. Let me pull up oilprice.com. We are at WTI 68.78 and Brent at 79. So yeah, you haven't had a crash in the oil prices. In fact, Brent crude's actually up quite a bit and WTI is down a little. WTI was, I think, at 73 a couple weeks ago. So you're having a divergence now more between Brent and WTI. It's interesting. But I guess maybe that makes some sense because a lot of that shale oil is ending up mixed into the WTI price. It gets blended. Okay, on to gold and silver. So, despite the dollar rally continuing, and again, you know, when I actually do see the dollar rally breaking down, I will alert you guys. But we're at 96 or right under 96 on the dollar rally. As of right now, doing this live stream, I see no evidence that the dollar rally has ended. Okay, no evidence yet. So we are seeing gold and silver and the dollar rally together. This is interesting. This is kind of what you would expect to see when professional money managers and portfolio managers are getting liquid. Okay, they're getting out of leveraged trades, they're getting out of other riskier bets, and they're going to cash. That would make sense why the dollar is increasing or staying pretty strong, and people are going to well, no, the treasuries are not. If a lot more money was going into treasuries, yields would fall. So we have seen Russia sell all their treasuries. But, you know, the liquid trade normally in the past was treasuries, it was cash, and it was gold. So 2 out of 3, it seems, people are going to safety with cash, dollars, and gold. So people are selling the rallies now. Okay, a couple more points. Oh, okay. So for gold and silver. So at the gold price we're at, the one stock pick, again, not financial advice, just my opinion, Osisko Gold Royalty. So they have over a $1.2 billion market cap. Osisko Gold Royalty, the symbol on the New York Stock Exchange is OR, as in Oscar Robertson, the amazingly old school basketball player who was good at everything. You want to look at a complete basketball player, Oscar Robertson was one of the best ones. So Osisko Gold Royalty is the company I want to talk about. They have the very similar business model as Sandstorm Gold. They are actually a bigger company, but they were not built from scratch. They were a spin-out from a mid-tier gold miner that kept a royalty, a large cash flow royalty on one of their properties. And so Cisco has a $1.2 billion market cap. They have a good amount of cash flow. The stock actually has crashed. So since September of 2017, the gold price hasn't crashed. It's gone down, but it hasn't crashed. But the share price of Osisko Gold Royalty has crashed. The share price is down from $14 per share in September 2017 down around $8 a share. This is from an operational standpoint, cash on the balance sheet. They're actually about to get more cash because the gold stream that they have on their Brucejack mine for Pretium Resources, Pretium's buying that back. So Osisko is going to have more cash to redeploy to go do another deal to buy more cash flow. So Osisko is actually a larger, safer company. They have a good amount of growth already paid for in their portfolio. Although I think on a relative basis, Sandstorm has more growth and is cheaper from a valuation perspective than Osisko. But if you have the resources to own both in your portfolio as a diversified gold portfolio, again, not financial advice, stupid disclaimer, then I think Osisko is a very solid buy here. I think a couple years from now, as Osisko continues to do more deals, more of the assets that they own that come online with cash flow, Osisko could easily be back up to $14 a share. Even if the gold price doesn't really do that much, it might be a lot higher than that a few years from now. The business is very solid. It's very similar to Sandstorm Gold, except that Osisko has more of their assets online generating cash flow. Perhaps, what are Netflix's main costs? Their costs are their content. They pay through the nose for new content. They do not own their content. They lease it. So in order to really understand that, you would have to go through the quarterly report or the annual report and see, probably in the hidden paragraphs that the lawyers disclosed, a lot of the agreements that Netflix is paying. But from what I can understand, a basic summary of the content that Netflix has is that they are willing to lease the content, not own it, but they're willing to pay higher and higher prices. So it's kind of, I use the analogy of like the doctor or lawyer that's living way above his means, that is, you know, going and getting leasing a new BMW or Mercedes or Ferrari or Porsche every couple years just to get a younger and younger girlfriend, like arm candy. And that's kind of how Netflix has been running things. But as long as people really love the content and there's a big pro-tech bias and the stock price doesn't crash, they can get away with running that debt for at least a while. They've gotten away with it for years. So I don't predict Netflix is going to go bankrupt necessarily, but they may if they can't go to the debt markets anymore, because all the people who are bullish Netflix, all the analysts covering the stock and the people who are bullish Netflix, they expect Netflix to continue raising more debt at a reasonable or low interest rate. That's the assumption there. That Netflix will keep borrowing until it becomes free cash flow positive. And the estimates for free cash flow for Netflix of when are all across the map. Some people think 2 years, some people think 4 years. And that could be a lot more debt when the company is running enormous amounts of expenses. I have a very small exposure to crypto right now. I only have Bitcoin and Litecoin. And it's only about 10% of my portfolio. I have more exposure to gold and silver still. And Sandstorm Gold, which I think the royalty and streaming companies, the 5 largest ones, are benefiting from the manipulation. So the longer that it takes for gold and silver to go up, the more deals you're going to have from your Franco-Nevadas, your Royal Golds, your Silver Wheatons, those guys. Osisko and Sandstorm Gold. Yes, I have a Patreon, perhaps. I will put a link in the information section underneath this live stream, but it is also under in the information section of every single one of my videos and interviews, the Patreon. Okay, so a couple more current events before I get to your listener Q&A. And so most of these are just Liberty-oriented. It's just really crazy how everything's getting. So one of the reporters at Breitbart Tech, Sky to London, was able to get a bunch of reports and leaked documents from Google where they're calling themselves the good censor, because Google is doing deals with China to develop like basically a full totalitarian search engine that can track you if you look up the wrong thing on Google that the government doesn't like, or the wrong thing on YouTube, you watch like an anti-government video or something. So that's already being implemented in China. But Google internally was talking about how they already censor, you know, any conservatives or Republicans, any pro-Trump people, and any libertarians already, and how they want to increase that going forward. So this is really sad, the situation we're in. I do not want government regulating this, though, because government screws things up. And also government's corrupt. There are a ton of stories the last couple weeks with government corruption. John Solomon over at The Hill, he's a award-winning investigative reporter, and he just released a story in the last couple days that people at the FBI, DOJ, and other key government agencies where you would not think that people are being bribed, they are being bribed. And they're getting thousands of dollars in vacations and other stuff. It's really bad. It's funny how a reporter finally did his job on that, because as you guys know, I've lived in the DC metro area since the year 2000. And, you know, anecdotally from friends and people I used to be friends with and family members who have, you know, second, third hand stuff, I've just heard crazy stories about that for, you know, long time. Basically since I got here. I've just heard people telling me stories about that. Stories about, you know, people illegally spending their government employee petty cash and, you know, going on expensive vacations, buying expensive designer handbags, even buying hookers on a work trip, and, you know, getting caught and then not getting fired for it. Just they had a report written about them, and that was it. They didn't go to, in a lot of cases. Now, sometimes a government employee will go to jail, but it's very rare. It normally takes the amount of embarrassment of like one of those Project Veritas undercover videos. You actually have to get the government employee like on video bragging that they got away with it and they're not going to get fired. Like, that's the type of evidence you have to have, and even then, it's dicey whether or not they actually get fired. So you got that. And now, and so I want to just tell you guys that you're going to have to be careful. The world that we live in is so messed up, especially in the United States, that you have to be careful if you're a libertarian or pro-Trump, or even trying to have a discussion now about like free speech or anything like that, or some of the alternative media news stories. You have to be careful in public about saying it out, any of this stuff out loud in public, your opinion, a current event, a news story, that, because you just don't know. There are literally now tens of thousands of credible death threats, like on social media, not just towards politicians. I mean, you have, I don't know if you guys have seen the news stories, but there was 2 female Republican, I guess, pro-Trump politicians in Minnesota, and one of them got sucker punched in the face by a guy. And, you know, there's I think Cory Gardner. No, there's the senator from Colorado. His wife, someone got her phone number and sent her a really gruesome text message of someone's head being chopped off, like a picture, a video. So people are getting all kinds of like really nuts death threat. The left does not play fair. You know, it's all hardcore radical. It's become even more radical. So be very careful. One of my buddies, I was eating at my birthday dinner with one of my new friends, Phil. I won't say his last name. He listens to this podcast, though. And he was asking me, you know, do you discuss this libertarian stuff and all these conspiracy theories with everyone? I was like, hell no, I don't. Hell no, I don't. I don't talk about any of this stuff with any random people. I mean, I say it here with rants on you guys on the YouTube channel, and I say it with my best friend, like in the car or something. But, you know, I don't go broadcasting this stuff to random strangers I do not know. Because you don't know how triggered or how crazy at this point people are. Look what happened to the guy, the New York Times. Okay, so the New York Times should be in trouble for this. The New York Times intentionally published the day, the time, the location for where the Republicans were going to practice for the congressional softball. Do you guys remember that? They basically said, hey, crazy people who want to kill Republicans, here's the location. All you have to do is just show up there. There's no security. All the congressmen and senators that are Republican that you hate will all be here. Oh, and there's only two or three armed security guards. And this is the direction they're looking. And so the New York Times is not getting any of the blame for this. The mainstream media, the people like Maxine Waters, Cory Booker, all these other horrible, horrible people who pretend to have the moral high ground, you know, they're just going to keep doubling down on this. They can't play fair. They can't beat us in a debate. So they're bad actors. What's the old saying about politicians? That they're ugly actors? So they're gonna stick to the script, man. They're gonna stick to the script. Oh, and the FBI, another scandal with the FBI. Besides a bunch of people in the FBI and DOJ, you know, taking thousands of dollars in bribes from mainstream media and other organizations. Also, there was FBI agents in Asia, and they were caught in a prostitution scandal. Great. Great. Our tax dollars at work. The SEC looks at porn, and the FBI orders hookers. Aaron Hawley, nailed it. Washington is Hollywood for ugly people. Well, there's actually good-looking women here now, but a lot of them are like the champagne socialists. The amount of even 10 years ago, there was not this many radicals here. I would take women out who were Democrats and for dates and stuff in college and when I graduated college here, and there wouldn't be any problems. Okay, they wouldn't want to castrate me, just for knowing that I wasn't hardcore Democrat, that I wasn't the most hardcore feminist like them. But it's changed in just like 10 years. It really accelerated once Obama won his first term. He started bringing in the most radical people. They started moving here, and it hasn't changed, even with Trump. But yeah, there are a lot of pretty women here in the DC metro area. I'm going to stop with the dating rants. I'm going to stop with the dating rants for this live stream. I won't go into any more of the details, but it's freaking nuts. A lot of them are champagne socialists. That's all I'm going to say. And a lot of them are willing to fully admit that they're champagne socialists. Okay, so I think I got all the topics out of... Oh, yeah, the Kavanaugh stuff. Yeah, anyone who isn't immediately willing to, without due process, without a trial, who's not willing to immediately say that Kavanaugh's guilty of all the gang rapes and all that stuff, now a lot of people are turning on those people and the threats are coming. It's bad. It's bad. It's getting worse. It's going to get worse before it gets better. So sad. And the Democrats and the big technology companies want to take away free speech. Welcome to dystopia. And they used to be the party of free speech. They used to be, the civil libertarians, and there used to be riots on campus of Berkeley in favor of free speech, only, during the baby boomer era, Vietnam War and other stuff. And those are gone. Those days are long gone. Ben Shapiro at Berkeley campus, I think he had to pay over $20,000 for his security just to give a speech at the University of California, Berkeley. And I think Ann Coulter was being charged $40,000 because since she's a Republican woman, they hate her even more. Okay, so I think I covered pretty much everything for this live stream show, so we can get to the listener questions. Thanks, Nick. I'm glad that you think the show is great so far. I've tried to keep it lively and entertaining. It's just me here. It's actually not that easy for me to talk for an hour, especially when I'm not talking to someone else. Although I do have some notes here, and I have tried to mix in a few jokes and some sarcasm here and there. But I appreciate the feedback. VRMKK, you said it's China. I'm not sure what you mean by it's China. China is creating... Well, first of all, I want to put it out there. Recommend Peter Schweitzer's new book. Forgot what it's called, but you can look it up. And he talks in there, the summary of the book is all the politicians over the last couple decades, Republican and Democrat, in the Senate and House, that China has bought and owns. And things are so bad that Senator Mitch McConnell married a Chinese heiress. And he's literally in bed with China. So, and also China has fueled this global real estate bubble, and we're starting to see it pop. So there's a lot of evidence now that the real estate bubble, and by the way, Australia has not had, I think, a recession for 25 years officially. Australia is very close, and their banks are going to be in trouble and probably cutting dividends. Their banks may end up needing a bailout. I wonder how Australia is going to have to deal with that too. But it's very interesting that we got Christine Lagarde at the IMF telling emerging markets to go to capital controls. Just ridiculous. But yeah, I think a lot of Chinese money has been stolen or laundered out of China, and it's gone into real estate all over the globe. And it went first to like Vancouver and different cities in Australia. Now it's starting to spread out. It also went to other major areas in the US too, and it's gone all over the place. So there's been trillions of dollars in Chinese money that has fueled this global real estate bubble since 2008. Because China did a ton of QE too. You cannot look at just one country in a vacuum anymore. Not in the how the rules have changed since 2008. Since Ben Bernanke wrote his academic paper about central banks taking turns, and he was Fed chairman and he started implementing that about the central banks taking turns, the rules changed a lot. And so if the European Central Bank is doing a lot of QE, the money's not all going to stay in Europe. And if the Bank of Japan is doing a lot of QE, all that money is not going to stay in Japanese stocks or the Japanese government bond market or Japanese real estate. There's a lot of people figuring out how to get that. And in some cases, I mean, there's a lot of people in the Japanese government and the Japanese central bank who want the monetary inflation and credit that's been created out of the country. So I guarantee you there was a ton of people up there in Japan who knew about the yen carry trade, and they wanted that monetary. They didn't want hyperinflation in their own country, and they didn't care about what happened to it once it left the country. So they did it just to say they were doing something, probably, and to prop up, you know, their Japanese government bond market and maybe that, but they were obviously in excess. And look at all the bubbles that have been created in asset prices. We haven't had that hyperinflation yet in consumer prices, but we'll have to see what the elites plan to do, you know, when the it starts to hit the fan. Okay, Daniel Garcia, next question. I think the U.S. government is buying equities via other entities through maybe Europe to cover their tracks. Do you agree? Well, I agree, but I'm not sure it would be Europe. So there's at least 5 or 6 plunge protection teams. Actually, like, it's been rumored for a very long time, Daniel, that there's Caribbean hedge funds that do some of this, that help with U.S. Treasury auctions if prices are weak, or S&P 500 E-minis futures contracts. I don't know if the Federal Reserve is going in there and trying to prop up Amazon or Netflix or General Electric specifically, but I think, you know, one of the things that does happen, talking with traders and articles I've read, is that, you know, one of the main culprits for market manipulation is the, especially for the general stock market, is the S&P 500 E-mini futures contract. Because either right before the stock market closes, you know, after 3 p.m. or in after hours, you have 10 million, sometimes even larger than $10 million orders per day coming in, and just massive one order dumps. And if you talk with professional traders who actually have to make a profit trading, they would tell you that they would never move the market like that with such large buy orders. And the same thing holds true for how gold and silver, with the dumps on the downside, with selling paper gold futures contracts, how the orders aren't spaced out, they're not sold into strength. It actually benefits a trader to sell if you know you want to sell into a rally. Okay? Or if you want to buy something, you want to buy the dips. You want to buy it on weakness. And that's not what's happening in the two markets, gold and silver, the papers futures market on the COMEX, and also the S&P 500 E-minis futures contract. And the VIX is manipulated too. But there's that leverage short volatility trade, which is incentivized for the people who have big stakes making money in the leverage short volatility trade, that they're already over leveraged, so they keep doubling down on it because they know if the leverage short volatility trade blows up, they're already going to need a bailout or go bankrupt, so they probably keep layering onto that trade to try to delay it. And you see that too in institutional investing. They're doing the same thing with Tesla. Some of the largest shareholders of Tesla, who I'm sure they're aware that things are starting to, the big problems at Tesla, that Elon, just because he settled with the SEC for securities fraud, that there's multiple other SEC investigations, and that there's also the Department of Justice investigation. In fact, one of my contacts who works on Wall Street, he told me through his sources that Elon Musk has been spending hours and hours a day lately meeting with defense attorneys over accounting fraud charges that are coming. So there's not a news story out on this, but one of my buddies who I follow on Twitter, and he's been working on Wall Street for 20 years, and he posted that, and he said he has really good sources on this. So it'll be, I'm not saying it's 100% true, but we'll have to see if it's true. And Elon, meanwhile, is tweeting about Tesla's growth. Meanwhile, they can't pay their CapEx, and they're even having problems with making a functional car that doesn't break down. Okay, moving on to the, Scott says that the stock market breaking down, it's the election uncertainty. Maybe. I think there's a ton of factors, Scott. I think that definitely plays a part in it. I think the election uncertainty plays a part in it. It's like what Nicholas Nassim Taleb says in Fooled by Randomness. It's normally never just one factor, but for an institutional investor, when you manage tens of billions of dollars, or you're like BlackRock and you have over $1 trillion in assets under management, if you decide that you want to start selling a large chunk, you are going to move the market. So those guys, when you're that big, you can't dump all your shares at once. But if you decide you're going to unload certain positions, it's going to take you months, if not longer, to unload some of the stock positions. So for your listeners who are not familiar, that's like what I would call market mechanics of how the market operates. If you're a whale, if you're a large stock market investor, or you're a professional investor, you're a large hedge fund manager, or an institutional money manager, or a mutual fund manager, you cannot dump all of your positions at once. You just can't. Well, number one, some markets are not liquid enough, but if you did it, you would destroy the value of your other holdings. So you're just not seeing that right now. But it does seem that there are more people, according to BlackRock's own data, more institutional money managers who are starting to fade or sell the rallies now, because they are worried about the trade war with the US and China escalating, how Trump and China have basically started a new Cold War. Hopefully it doesn't get violent with a real war. And on top of that, you know, the strong dollar and the damage that could do, the interest rate hikes, and the increased volatility in asset prices. So all these things, and then some of the other owners or some of the other large institutional investors are worried that the strong dollar will mean weaker earnings and that earnings have peaked. Also, you know, if you have workers getting higher wages, that would also probably, some workers are getting higher wages. That would also mean that input costs are going to rise, and that would hurt profit margins. That would also hurt earnings. But that can be offset, though, with financial engineering and the share buybacks. So on the one hand, with the stock market, you have share buybacks continuing still, and you have retail money, which a lot of people would label dumb money, but I don't think all you guys are dumb. I just think some of you got, not people listening to this podcast per se, but there's a good amount of retail money, like my dad and others, that anytime something is going up, they think that they can get rich quick, and they move money from one thing that's not doing anything or not moving, as my dad would say, and they move it into something else that's going up. And they're chasing, hoping that, okay, it'll go up even more. And so there's, I talked about this on the last live stream, that there's record low cash balances for retail brokerage accounts. So retail is very long stocks right now, while on the other hand, institutions are starting to sell the rally. And also corporate insiders are selling the rally, but on the bullish part, you still have the financial engineering and the share buybacks. But I don't like those that much. They're not doing it with free cash flow. Long term, they're loading the balance sheet with debt. But in the short term, that does move the stock price higher. And I think, Daniel, unfortunately, to add to the question here, I talked about this on the Welcome to Dystopia episode 44. I think there's a lot of plunge protection teams now. I think China and other governments have copied the US. So I think the level of intervention into markets, whether it's the currency market, governments are notorious for having their Treasury Department intervene with exchange rates, especially if an economy does a ton of exports. I use the example how desperate Brazil was to try to manipulate their exchange rate. And they did it with synthetic US dollar swaps. And there was actually, I can't remember if I explained the story well on the Welcome to Dystopia or not, but there was actually a story that Zero Hedge covered, but one of the central bankers from Brazil brought the information to a Bloomberg reporter. And he said, look, the stuff that's going on from my bosses at the Brazilian Central Bank, they're loading the Brazilian people, the Brazilian taxpayers with tons of extra liabilities in the long term, just to try to manipulate the Brazilian reals dollar exchange rate to keep it steady. And he was like, in the long term, this is going to hurt the country. And so he leaked that, and then the Brazil Central Bank was denying it, but it seemed legit to me. So I think a lot of governments are doing this stuff. Now, the U.S. has the biggest capital markets, and there's... Now, maybe the Federal Reserve doesn't care if the stock market crashes for 6 to 12 months, but the U.S. government is so reliant on capital gains taxes for tax revenues now. If you go and look at the portion for U.S. Annual tax revenues, the amount that comes in now for capital gains taxes on stocks and bonds and stuff, it's a lot higher percentage than it was in the past. So from my standpoint, the government has a perverse incentive to increase and continue interventions in markets to try to keep those higher tax revenues coming in. But, you know, maybe the Democrats at the Fed do want to keep raising rates, although I don't think Jerome Powell is a Democrat, but maybe the other people at the Federal Reserve who are involved in the vote there are, I know they're hardcore Democrats. Lil Brainerd was a big Hillary supporter. And she talked about how the Fed's going to continue hiking rates even if the yield curve goes inverted. And anyone in finance who has any experience in financial markets knows that normally an inverted yield curve means that things are really, really bad. So it could be a paradigm shift at the Fed. We'll have to see. My educated guess for now is if there is a major stock market crash, the Fed won't allow it for more than 6 to 12 months without changing the rules and doing more intervention and more QE, maybe some type of coordinated action with other central banks. Even more than we already have now. VRMK, China may be falling apart right now. Well, China can change the rules. China can devalue. I mean, a lot of the people with the social credit score and stuff, there's been an enormous amount of brainwashing in China for their own citizenry, and they bought in. And so the Chinese government can get away with a lot. I think a lot of Americans are brainwashed too, and the American government can get away with a lot because there's so much bread and circuses here, whether it's celebrity gossip or stuff on TV or sports or movies or whatever, or music. But I think like Chinese people are even more brainwashed than most Americans. Some Americans are starting to wake up. I'm not so sure about things, how things are in China. But I think China's probably, I don't think China's going to totally collapse. So I've highlighted all the credit problems in China, and China has built a credit Ponzi scheme in the last 10 years. They've set records for amount of credit growth in a 10-year span. But I think China will deal with this with bailouts and currency devaluations. And I think, unfortunately, a lot of people in China who are not freedom-oriented will just shrug their shoulders. Maybe they'll buy Bitcoin. Maybe they'll buy some crypto. Maybe they'll move more money out of the country in China. People in China are very creative about figuring out ways to get money out of the country, even with capital controls. But I don't think China will totally collapse. I think the Chinese government has more control than you think. And they will change the rules and do bailouts and currency devaluations over the next 10 years. There will probably be, I've said this for a while now, a pretty big RMB devaluation in the next 5 years. It might even be more than one. Kyle Bass has been wrong, though, for I think the last 3 or 4 years. He was predicting a big one, and it didn't happen. China has been able to not do it, and that's despite all the credit problems in their economy. But there's a very interesting interview from an author of a new China book about China's debt trap. And it's over on the Hidden Forces podcast that Dmitry Kofinas did, and he released it in the last week or two. I forgot the guy's name offhand because I don't have it in my notes. But if you want to hear more about that, he lived in mainland China for over 10 years, and he was researching there, and he talks about the shadow banking system. So check that out if you have time. Dr. 8, you're Lee Harvey Oswald? You came back from the dead just to comment on this podcast? Taking a swig of water. I'm looking through your comments. We're going to wrap this thing up here in about 10 minutes. I will look through more of your comments. I think I covered pretty much everything I wanted to cover. The Laker game is on in a couple hours, though. I am a big Lakers fan because I am from Southern California. I've been a Lakers fan since Magic Johnson and Showtime. So I'm looking forward to seeing how the Lakers play with LeBron James later. Luminary wins. Massive stock market collapse on its way. So you're predicting the Dow will be cut in half. Yeah, I mean, there's a lot of people predicting that. So I agree with the fundamentals for why they're saying the stock market will collapse. John Hussman, who's a very smart guy, professional money manager, he's been calling for a 50% stock market correction for 10 years, since 2009 or 10 maybe. Very smart guy. David Stockman, very smart guy. David Stockman's also been wrong for all of his stock market predictions for 10 years now. I think David Stockman's a brilliant guy. His books are great. His articles are great. But any of his stock market predictions have been totally wrong for 10 years now. So it means you just can't listen to any one person. And if we do have a more volatility, you know, there's ways to protect yourself. There's ways to profit off volatility. But you have to have the financial education to do it. You have to know fundamental analysis, technical analysis, and then the professional options traders, if they know what they're doing, they use options for leverage on those trades for volatility. The problem is in the system that we're in with the governments and central banks, and a lot of people are not pro-freedom, pro-free market. A lot of people aren't even pro-capitalism anymore. You should see Teen Vogue magazine, which has an enormous presence on social media. One of their head writers just wrote an article about why capitalism needs to end because it's it's increasing poverty and we need to go to socialism. They just put that on their Twitter today. You know, as long as a lot of people, Americans or other countries are going to have that type of attitude, that's a pro-big government, pro-collectivism, pro-totalitarian, pro-interventionist attitude. So governments are going to be able to get away with a lot of stuff. Governments are going to, you know, it's going to be a fake PR. It's going to be, they're going to issue a press release like kind of how the Patriot Act was sold. The Patriot Act was sold, I think, initially to increase freedom. You know, nowadays, the way when the government announces like a new piece of legislation or a bill or something, it's full Orwellian. So the name is the exact opposite of what the legislation actually does. Up is down, left is right, inside is out. That's the new normal. And it freaking sucks. And a lot of people, unfortunately, believe it. Dr. 8, Trump has switched to blaming the Fed now. You're correct. He has switched to blaming the Fed now. However, if the stock market goes up in spite of the rate increases, Trump will tone it down on blaming the Fed. That's my opinion. But yes, he set things up. So if the stock market does crash, he will blame the Fed. And he's saying how he cannot accomplish all the things he wants to accomplish with his spending programs, his infrastructure, building the wall at higher interest rates. So he set it up to blame the Fed. Now, the mainstream media is not going to see things that way because they hate Trump. So no matter what, it's going to be Trump's fault. And they have Trump on video and with his tweets taking credit for the stock market. So he's going to hear it relentlessly. And this will hurt if the stock market does crash before the November midterms. The Republicans who have Trump as endorsed will be holding the bag. Okay, looking through more of your comments and questions. A couple more. Try to a little under 10 minutes now. Starting to get tired. Starting to get a sore throat. Dr. 8. Operating cash flow minus CapEx, minus debt repayments, minus dividends. Yep. Yep. That's, you know, you summarize free cash flow, basically. I've heard other summaries of free cash flow as just operating cash flow plus depreciation minus maintenance CapEx. But in general, you can look up the company's costs. And you can see sometimes there's like a really one-time expense or companies taking like a one-time charge and that's not affecting operating cash flow. So you have to see if a company takes a big write-off or a charge, which is bad for earnings in the short term, if it's affecting operating cash flow or not. But Netflix does have operating cash flow. The problem is they are spending more money than is actually coming in. And they can get away with this because their stock price is so high and has been going up. So they could either, when you're in the situation Netflix is and the customers love it and the stock price is high, they could either sell more shares or they can take on more debt. The bankers will give them more debt. They'll get an increase in revolving credit facility. They'll be able to tap the bond markets for maybe non-junk debt at a lower interest rate. So they do have options. Now, if the stock price drops or their revenue, they start to lose customers or things around some examples like that, then they're going to have less options. Then they're going to either have to dilute a lot. But the way management has chosen to grow the business, I don't think is that smart long term, and I think it's going to lead to a lot of volatility in the stock. In the past, about 4 to 5 years ago, there was 100-point moves up and down in the stock price in Netflix over, I think it was only 3 or 4 months. I was I was giving my opinion on Seeking Alpha about 4 or 5 years ago, talking about options trades in Netflix, and one of the guys who was following me on Seeking Alpha said he made like a 100-point move on a long straddle with calls and puts because the Netflix stock was going crazily up and down with volatility. So I think for a while Netflix has been pretty tame, but I think we could see big moves up and down with volatility in Netflix. And especially as Disney's new streaming service, that's gonna, and you have Amazon's new streaming service, which is starting to gain more popularity. So there is more competition to the space. Perhaps I already said Netflix main cost. The cost is the content. They pay through the nose for the content. I believe some of their, there was a really good science fiction show called Carbon something. I forgot the exact name of what it was called. But Netflix was paying $10 million per episode for this awesome sci-fi show because of the graphics and the actors. So, and Netflix had like 10 or 11 episodes of this, and their costs were $10 million per episode, and that was just one show. I don't know if it got renewed or not. It was a really good sci-fi show. It's based off a graphic novel, I think. I really liked it, at least. I like science fiction. Not everyone's cup of tea, but I do. So if there's any libertarian women listening, we can go to Comic-Con. We can go watch a science fiction movie. Luminary wins. Countries are dumping our debt. No one believes the dollar has value. Federal Reserve and 1% equals Ponzi scheme. All fiat currencies are Ponzi schemes. This is the problem, though. So the U.S. is the strongest. U.S. has the military. The U.S. has the strongest military for now. Yeah, not every country, Luminary wins, is dumping dollars. Russia has dumped. China hasn't dumped everything. China is still running a dollar peg. So to run their dollar peg, they have to have holdings. Okay? This is something that people in the gold crowd and alternative media don't understand. That China, as long as China wants to run a dollar peg, they have to be buyers of either dollars or U.S. treasuries. They have to have exposure to devalue their own currency against it. But all fiat currencies are Ponzi schemes. So you can't just say the dollar is a Ponzi scheme. All fiat currencies are Ponzi schemes. Now, the U.S. has the most to lose because we're the most in power. Well, I don't know if I should say we. I live in the United States, but the government and the bureaucrats and the Wesley Mouches don't really represent my views. Okay, they don't listen. They just show up with suits and badges and tell me that they want to shut down the podcast and all this other bullshit. So they don't actually implement anything I suggest. FANG stocks will collapse 80%. If they do collapse 80%, I would actually start to buy that because you know what? It's the plunge protection team, or the rules would be changed. There would be some type of quantitative easing program or something. The Swiss Central Bank would come in with even more capital, their technology hedge fund that they've created with tens of billions of dollars, and start buying up technology companies again. I think a lot of these governments are using, like the big tech companies, they have a vested interest in censorship, and that's also why they prop up the stocks. And we found this out from like Edward Snowden, his data dump with how like the CIA and the NSA were investing in Facebook and Google. So I think that's another reason why those stocks do pretty well. Is they're kind of pseudo-government agents. They're kind of like Fannie Mae and Freddie Mac now. They kind of do the non-governmental censorship. I mean, only about 1,000 people are gonna see this podcast, and my channel my channel is 3 times the size audience-wise that it was in 2015. So my audience is 3 times larger, but my views per video are down like more than 90% now. No matter what guest I interview, you know, even live stream is supposed to have more views. So I guess since I'm not spending enormous amounts of advertising budget, pumping the videos or putting like crazy titles like Silver 10,000 or some, so no, my silver price target is not of $9,000 is too low because I'm not putting those in the title or saying that ridiculous stuff, that my views are down a lot. Luminary wins. Yeah, it is alternative bookkeeping. There's massive, I've said this a lot, on the publicly traded companies, there's a very large percentage of companies now committing accounting fraud. And you know what? It's going to continue until a good amount of CEOs and chief financial officers actually go to prison. Okay, there's fraud laws on the books. And I know for a fact that there's short sellers that are giving the reports and information to the regulators, telling them there's fraud. And a lot of times the regulators don't do anything. Sometimes the short sellers even get harassed. Listen to the story of Marco Hodes. Marco Hodes tried to report the fraud at MyMedix, the accounting fraud, and also Medicare and Medicaid fraud at MyMedix. And instead of the regulator saying, thank you, Marco Hodes, We are going to do our jobs. We are going to bust the CEO. We are going to arrest his executives, his chief financial officers for fraud. You did a great job helping us out. Here's a whistleblower, I don't know, here's a whistleblower fee for your trouble. Instead, he got visited by FBI agents, I think, corrupt ones, who threatened to kill him if he kept this up. The interview where Marco Hodes talks about this, I think, was in July on the QTR podcast. So even when whistleblowers come forward, another example, Harry Markopolos. Okay, I've talked about this. His great book, No One Would Listen, about the Madoff Ponzi scheme. He figured it out 10 years before anyone else. He figured out in 10 minutes with math that Bernie Madoff's split strike conversion, his option strategy, was not mathematically possible to get 10% per year in any market condition. There just wasn't the amount of options liquidity. And Harry Markopolos said, just look at the trade tickets. They're all fraudulent. There's no way he did these options trades because all the options markets where he's claiming to have done the trades, they're not large enough because Madoff was managing too much money and was claiming to make profits that were not mathematically possible given the options markets. And instead, what happened was Harry Markopolos was worried that when the Madoff scandal finally hit, that he was going to get killed and that all of his research was going to get destroyed. Now, the SEC, I think, did create a new whistleblower program, and I think people can get money for reporting fraud, but I'm not sure how well it's going. Harry Markopolos, in the last couple of years, he doesn't do many interviews. He said he was cautiously optimistic that that would improve things, but I don't know how much. Perhaps, thank you, I appreciate the kind words. Hey man, I have about 10 years, give or take now, of financial industry experience, working different jobs. Even when I was working full-time jobs in the financial industry as a stockbroker and investment analyst and a newsletter writer, I was still learning more, listening to podcasts, reading articles, reading books, reading audiobooks. I was hustling, man. Unfortunately, I've had a lot of bad luck too. I thought my educational technology company would have been funded. I thought, honestly, that I would have had a hedge fund day job already. I'm shocked I don't have one. But we're going to keep doing the podcast because I really do not appreciate the stuff that's going on in the mainstream media and the mainstream financial media. I mean, did you guys hear the stuff Jim Cramer said? Jim Cramer just freaking said that Domino's Pizza is a technology stock. Is he going to say that Domino's Pizza is a construction company too? Because they're paving over a couple potholes. Domino's Pizza, that's like saying like Johnson & Johnson is a technology company. No, these companies will employ new technology. That's how they maintain maintain margin or increase margin or maintain or decrease costs. But they're not technology companies. Just because ExxonMobil is investing in new technology to either find oil or lower costs for refining or something like that to find new oil or natural gas or whatever does not mean ExxonMobil is a full technology company, okay? They still have to produce oil, which is still not a good margin business for the most part, okay? But Jim Cramer has turned into basically a clown. He's a smart guy, but, you know, he's willing to do or say anything to get ratings. It's ridiculous. And he's definitely a pumper. Even my dad said Jim Cramer's a pumper. And my dad was telling me, he was giggling when he told me this. He's like, Jason, I bought Tillery before Jim Cramer started pumping it. Oh my God. My dad was like actually like super jolly. He was so happy. I don't know what Tillery has done recently, but I was trying to tell him recently that warning about Tillery, and my dad's like, oh, I don't care. I'm already up so much and all this stuff because I bought it before Jim Cramer started. My dad's still repeating that. Oh, don't talk trash on the Lakers. Come on now. Lakers have really good young players. It's only a matter of time before they get better. I don't know how good LeBron James will be in 2 or 3 years, but the young players are going to be improving a lot. Okay, so we're going to get through a few more of your comments, and then we're going to shut things down. Okay, FHUK off. Very clever name for F off. What's a champagne socialist? That is a good question. I've asked myself that question a lot too. From my anecdotal experience, a champagne socialist is a hypocritical, very beautiful woman who wants very expensive things. So she wants to go on very expensive vacations. She wants very expensive dinners, Michelin star restaurants. She wants very expensive gifts. But all she does is talk about how great socialism is, how much she hates capitalism, how good Barack Obama is, how much she loves him, how much she wishes she could marry Barack Obama, how Hillary Clinton got totally screwed by the Russians and by Trump. So that would be a champagne socialist. Probably has a Che Guevara t-shirt, probably proudly wears a Che Guevara t-shirt, running with her brand new Apple products, driving her married boyfriend's Mercedes-Benz or BMW that he bought for her. That's probably a good description of a champagne socialist in the DC metro area. Ed, Mo hasn't been my business partner since March or April of 2017. I bought him out. That's it. That's all I will talk about. He hasn't been my business partner for a long time. I am looking for a new business partner, though. So if anyone wants to help me create a new podcast product behind a paywall on my website, that would be great. Or wants to go with me to pitch meetings to angel investors or venture capitalists and pitch some of the people in my contacts list who I've interviewed about raising money for my educational technology company, that would be great. I have a full business plan. I just need actually someone who can speak good English and go with me either on the phone or in person to pitch meetings. I have a legitimately good educational technology business plan. The problem is it's going to take a couple of years after the money is raised and spent for it to make good money. But it is a good plan. Doug Casey even said it was a good plan. Although he did not write me a check. Because that's Doug's way. Doug wants me to hustle and do it on my own. Okay, guys. Well, there's a lot more comments here and I'm getting tired. So I'm going to shut down the show for now. And I'm going to go grab some dinner and get ready to watch the Laker game. And I wish everyone a happy weekend. And take it easy.